Hi, I'm Shashank Bhargava, and you're listening to Three Things, the Indian Express news show. Over the past few years, cryptocurrency's rise has been swift and global. What began as an alternative to banks and governments after the 2008 financial crisis has grown into a powerful market. One that has also raised serious concerns about transparency, risk, and widespread misuse. But before we talk more about that, it might help to first understand what cryptocurrency actually is, something that at times can be surprisingly tricky to explain.
It is a difficult question to answer, but also when you think about it a little, it's actually very easy. The simple answer is that if you don't know anything about cryptocurrencies, do not invest. It's a highly volatile asset class.
That's the Indian Express's Soumyarendra Barik.
So cryptocurrencies are digital assets, right? Which is built on this technology, which is called a blockchain technology. Just imagine like it's a web where, if you do something on that web, that gets recorded. And when someone else interacts with your interaction, that gets recorded. And that's how this entire blockchain, basically that chain proceeds further. So just imagine it as illustratively as that in your mind. And technically, it's a decentralized online ledger. It's a ledger system that essentially records transactions securely and transparently, at least on paper. That's the hard sell about it, right? And unlike traditional currencies like, the Indian rupee, the US dollar, etc., which are traditional fiat currencies, cryptocurrencies, the common examples being Bitcoin and Ethereum, two of the most popular cryptocurrencies, they are not regulated by any government just simply because of their nature. It's not like how the RBI issues the INR, how the US Fed issues the US dollar, etc. The Bitcoin is not issued by anyone. There are different ways to get Bitcoin. The most traditional way and the most technology intensive way is that you solve a bunch of very difficult mathematical equations through which you can mine cryptocurrencies, or of course you can just simply buy it off.
And a cryptocurrency's value is shaped by supply and demand, as well as market sentiment and geopolitics, factors that make it especially volatile.
So yeah, again, if you don't know anything about cryptocurrencies, stay away from it.
But given how volatile it is and the fact that it's not even regulated, why do people invest in it at all? The simple answer is the quick gains that it promises to offer.
If you look at the history of cryptocurrencies and you would hear stories that I got into crypto when Bitcoin was like a few $100, when Bitcoin was a few tens of dollars, etc. And today when you look at Bitcoin, I remember a few weeks ago, now of course it's fallen down a little bit, but a few weeks ago it had reached an all-time high with one Bitcoin being worth $110,000. So, there is this promise of there being significant gains if you invest in this currency. And I think that is simply the biggest pull for many people, specifically a lot of young people who are increasingly investing in the sector. And also, it's a 24/7 industry. Unlike our traditional stock exchanges, etc., where you invest in public companies and all, which have a set time, they begin at 9:15 in the morning, they close off at 3:30 in the afternoon. And after that, you can't really invest in the public markets. Cryptocurrency markets, you can invest at any point in time. You can come out of at any point in time. So really, it's a 24/7 by 365 kind of an industry. And I think that's also, again, another lucrative part of it, where the trading can be done for a much more longer time. You can be invested in the market for a much longer time, but also, as importantly, come out of the market whenever you want to. So I think there is some amount of lure there for some people who maybe, caveat being, who see cryptocurrencies as a legitimate means of investment. Perhaps that is what really makes these currencies really lucrative for them.
And this is why this industry has witnessed a global rise. And India actually is one of its biggest markets.
India has surprisingly seen a very grassroots sort of adoption of cryptocurrencies. It's one of the largest markets globally, estimated to have close to 120 million users. That's a significant amount. As far as market value is concerned, it was valued in 2024 at about $2.6 billion. But also there are estimates that this can rise to more than $15 billion by the end of 2035. That's actually a CAGR of over 17%. Quite impressive, for something that from an Indian investment sense is as far from being traditional as possible it is, right? It is such a different kind of an investment asset, investment class that, say, for instance, several people in our parents' generation, for instance, would probably stay away from it because, they would rather invest in something that they feel is much safer, etc.
But that's not the case for many younger people who tend to have a much bigger appetite for risk.
So there's this crypto exchange called CoinSwitch, one of the biggest in India. they had recently released a report which showed that people from this Gen Z generation, who basically people who are between 18 to 25 years of age right now, they are actually topping the investor base for cryptocurrencies, accounting for as much as 38% of the total investors. This is again data for this one particular exchange, but the trends can translate across the industry. The second biggest investor, again, you see that gradation vis-a-vis age, right? The youngest of the lot between 18 to 25, they formed a significant chunk close to 38%. Then you have millennials, people between 26 to 35 years of age, who come in close at about 37%. Then you see a sharp drop for people aged between 36 to 45, who account for about 18%. So there is a clear demarcation, as the younger you are, it seems that the more likely you are to invest in this, and, vice versa. But also what is more interesting beyond this age dynamic is also, the geographical dynamic of it. Of course, you would expect that cities like Delhi, Bangalore, Bombay and all, they would dominate as far as the investor base is concerned. But also this report showed that, some tier 2 cities like Jaipur, Lucknow and even Patna, they're also emerging as very strong centers of adoption. So that really shows you the nature of cryptocurrencies and how and where the traction is coming from, right? So it's clear that it's primarily younger people. The younger you are, the more likely you are to be an investor. But also, it's not a tier 1 or a metro city phenomenon anymore, clearly. You see people from cities like Patna and Lucknow are investing in this. So clearly, it has gone into the grassroots, which is very surprising given that it's not promoted by the government. Rather, the government very regularly antagonizes it. The Reserve Bank very regularly antagonizes it. But despite that, and I think that is to say that that's just how strong the promise of making that quick buck on crypto is, that you see all these young people getting attracted to the sector.
Now, the reason we're talking about crypto is that over time, it has increasingly become a preferred channel for money laundering, with agencies around the world scrambling to keep pace with the scale of the problem. That's according to findings from an investigation by the Indian Express, in partnership with the International Consortium of Investigative Journalists. Spanning 10 months and involving 113 reporters across 38 newsrooms, including the New York Times, the project, titled Coin Laundry, reveals how crypto exchanges worldwide have helped create a shadowy economy where illicit transactions move with unprecedented ease. Now, the investigation, like we mentioned, primarily focused on crypto exchanges, the main gateways through which people invest in the sector.
So crypto exchanges are online platforms that allow users to buy, sell and trade in cryptocurrencies. They function somewhat similar to like a stock trading platform, but these entities deal exclusively in the digital tokens or the units that can be represented. Popular exchanges that are globally known are, some examples are Binance, Coinbase, but there are also some very prominent Indian exchanges such as CoinSwitch, ZepPay and WazirX. And just the basic underlying factor is that basically you can invest into cryptocurrencies via rupees on these exchanges, and then they store them in their own digital wallets. So yeah, a lot of the investigation actually focused on some of these most prominent cryptocurrency exchanges. And what we found is that how these exchanges are operating in sort of a regulatory gray zone around the world, but more so in India. And also because of the underlying technology that powers them, that they're able to steer far ahead of policy making, of regulation formation, etc. And how they have now become the newest gateways and hubs for dirty money to cross borders. A lot of the Indian agencies and the Indian investigators that we spoke to here as part of the India part of the investigation, the picture was quite clear that, our investigators are scrambling to keep up pace, because of the cross-border nature, because of the 24/7 by 365 nature of cryptocurrencies. They hit dead end after dead end whenever they're investigating cryptocurrencies. So really, the basic essence of the investigation is that, you of course have your old traditional networks of Hawala, etc. But now cryptocurrencies, again, because of the ease of investment, because of how easily you can divert money, how quickly you can divert money, while still shielding yourself relatively from the traditional banking sector, etc. That has made cryptocurrencies a very lucrative asset, not just as an investment class, but also, as a potential to store away a lot of your dirty money.
The investigation shows that over the last 9 years, crypto exchanges have faced at least $5.8 billion in fines, penalties, and settlements. That figure of $5.8 billion points to just how large and how opaque this parallel financial universe has become, a space once dominated by traditional tax havens.
And what is different is that probably for the first time, people were looking at the VDA industry. The VDA industry, I mean the digital asset industry.
That's the investigative journalist Ritu Sarin, who, along with Soumyarendra, undertook this investigation.
And also coalescing it with the fact that a lot of dirty money is also being laundered into cryptocurrency. And interestingly, just 2 days after we finished Coin Laundry, I was off to Kuala Lumpur to attend the Global International Conference of Investigative Journalists, where you have about 1,500 investigative journalists attending. And among the people speaking there was Joseph Stiglitz, Nobel laureate. And he, in the question answer session at the end of his talk, was also asked about cryptocurrency. And he said that looking at it as a money laundering device and etc. in terms of banking, he thinks it's a step backward for the financial industry. And in fact, he said the whole cryptocurrency industry is a fraud. And also that the media has not exposed it as a fraud. So, coming from him just at this time, I just thought it was interesting. And a lot of work has been done by this team of 100 plus journalists. ICIJ themselves, their data experts, looked at hundreds and hundreds of transactions. A transaction in the crypto world, it's like they are crypto wallet addresses, and the exchanges are akin to a bank, and the blockchain, of course, is akin to a ledger. So hundreds of transactions through several hops were investigated by them, and some very important work has been done.
She says as part of the India leg of the investigation, the team accessed data from the Home Ministry, covering the period between January 2024 and September 2025.
They have a unit called the I4C, which looks at digital frauds and looks at now cryptocurrency frauds also. And we got some exclusive data published for the first time, which sort of matched this global data, that 27 exchanges in India have laundered money via cryptocurrency, totaling 623 crores. And I said 27 exchanges. In these 27 exchanges, it could range from one exchange having 360 crores. So the largest figure for any of these exchanges was 360 crores, and of illicit money being transferred through cryptocurrency. And the lowest was just 6 crores.
Ritu says that one thing that really stood out to her during the investigation was also the sheer volume of frauds being carried out by Indians abroad.
So we sort of did a primer of some of the most important cases, and we got the charge sheets of some cases of Indians who had committed frauds in the US but are now languishing in jail here, or there's an extradition request for them. Very, very serious offenses. And the money was laundered in cryptocurrency. I also got a new aspect, and that is the two agencies I mentioned. They recover and they seize the VDA assets, just like you seize, money lying in a bank account or a locker. So the Indian agencies are confronted with the problem of where to keep the seized cryptocurrency. So one agency we got to know has stored with an Indian private store wallet company. And the Home Ministry is apparently now preparing guidelines on where this cryptocurrency should be stored by government agencies. The other thing is, of course, freezing of assets. And if there's a case against the thing that they also do, one is to freeze cryptocurrency and seize it, and then movable and immovable assets.
Now, while storing cryptocurrency poses a challenge for agencies, it's nothing compared to the difficulty of recovering these funds in the first place.
So, there was the lead reporter from ICIJ is Spencer Woodman. Spencer said that, at least in the US, it's almost impossible for agencies to recover money. The thing about crypto is that, yes, there is traceability. When you talk to the exchanges, they'll say this is something that can always be traced. And we are in India, for example, FIU compliant. All Indian exchanges are registered with the Financial Intelligence Unit. But we also, when we were working on the story, we realized that even if you take the help of experts, you can track one hop or two hops or three hops. But can you track the last hop? So and certainly for the enforcement and investigating agency, even with forensic experts, and we spoke to several of them, can they get to the last, Bitcoin? So, in the words of Stiglitz, he calls the whole industry a fraud. And in India, the finance ministry and the government have been wary of banning it, of course. We know what has happened in the Supreme Court and all that. So, it's a grey zone. They are wary of regulating it. or making it authorized or banning it. Neither has been done.
Now, among the cases highlighted in this investigation is that of a man named Vladimir Akhonyakov, better known as Lado, a 47-year-old Russian entrepreneur accused of orchestrating a series of global cryptocurrency scams. Investigators allege that these schemes siphoned off as much as $1 billion from millions of unsuspected investors across 4 continents.
So it's just a case of an intrepid fraudster or scammer, whatever you want to call him, who's now wanted in several countries. He has cases against him in the US, in Slovenia, in Georgia. In fact, Georgia has an arrest warrant against him. He lives in Dubai, where he has been reconfiguring his crypto platforms, giving new names for all of them. And he, interestingly, has been focusing on India also. He has a marketing plan for India. And the states that he is concentrating on are Karnataka, Andhra Pradesh, Telangana. And he has a marketing team there, and he is trying to get investors in India.
Interestingly, Lado has now also entered the film industry and was involved in the production of a film called Portal of Force, which released earlier this month.
And there's a Indian actress featuring in it, Disha Patani, and in an important role. Maybe she's among the top 6 in the film. So you have an Indian there. So we sent her questions on, are you aware of Lado's background, and are you aware he's a wanted man? Are you aware that he's alleged to have committed frauds of, millions of dollars? So there was no reply. And the other India angle is that he launched a magazine for his company, and the occasion was the birthday of Elon Musk's mother, which was celebrated in Mumbai, and the magazine launch was there.
Now, Lado's case is, of course, the flashier one, involving several prominent names. But as Ritu mentioned, there are many individuals around the world who have been arrested for money laundering using cryptocurrencies. And one concern raised by agencies like the Enforcement Directorate is the emergence of a dangerous new model: international Hawala transactions using crypto transactions.
So, to put it simply, in Hawala transaction, it's a very old method being used for centuries.
That's the Indian Express's Jay Mazoomdar, who, along with Mahinder Singh Manral, was also part of this investigation.
So in this system, it happens informally from point A to point B, usually across international boundaries. Transactions are made, but money doesn't really move physically. So person X, who is the sender, he gives money to person A in his own territory or own country. And then person A, he contacts his partner. They be in another jurisdiction. They're called the Hawaladars. So based on trust between person A and person B in his jurisdiction delivers the fund to person Y. So between X and Y, fund moves based on the trust between person A and B, but the real money doesn't have to move through bank, or they don't have to really cross any international boundary, and this remains under the radar of any regulator or banking system.
And it turns out that many of these transactions are now happening through crypto. In fact, in some ways, cryptocurrency has become Hawala 2.0.
The very fundamentals are the same, but what is happening here is because of the tech involved, it is becoming more efficient in terms of speed, in terms of volume, and also more critically, it is adding too many layers between the sender and the receiver. So in the traditional Hawala model, you would imagine that there could be 2 to 4 layers, because the A to B, these are the 2 unknown layers that is existing between the sender and the receiver. But in this case, because the blockchain's inherent nature, where you can't trace the movement, if it happens beyond or outside a KYC compliant system, then potentially you can add any number of layers between the sender and receiver. So it becomes even more difficult to crack for the regulator or the investigators. And secondly, because in traditional Hawala, the receiver and the deliverer, they're both handling in physical cash. So there is certain geographic or physical limitations. In crypto, you can keep bouncing jurisdictions from one country to another, then further to any jurisdiction for any duration, adding any number of layers you want. So this is basically Hawala 2, which is much more tech efficient and much more secretive.
And this is exactly why these transactions are so difficult for law enforcement agencies to track. Jay explains that money from a single source is immediately split across multiple accounts and then later pooled into a different one.
This is a stage where it is still possible for the agencies and the regulator to track, because the banks are now very conscious about such funds movement. Because if you recall that some years back, they had this new regulation that even funds movement under 50,000 rupees would require KYC. Earlier, bottom line was 50,000. So many bad actors who are manipulating that by sending funds in denominations such as 48,000, 49,000 in too many transactions to cover up their target, but using that gray area. So these things can still be traced, but then it becomes increasingly more complex.
Because from this pooled account, the money is usually moved through UPI transfers and then converted into cryptocurrency.
Now, this conversion, if it happens on a regular platform, which are KYC and anti-money laundering rules compliant, then these will be tracked. But they usually go through models which are called P2P or OTC, that is people-to-people transfer or over-the-counter transfer transaction, where you don't have to follow stringent KYC rules, and this can stay under the radar. And then comes another layer of obfuscation, where you are going into something called tumbling, that this is similar to the stage one, where we saw that money coming from different sources, many small accounts to a pool account. So tumbling or mixing is similar. Here, instead of currency, you are having crypto coins sourced from different wallets, and then they're being mixed and reassigned. So it further obscures the trail. And during this chain, the crypto coins are held in unhosted or private wallet. Unhosted typically means not hosted by any compliant regular exchange or platform, and it is controlled by the individual who owns the wallet. So there again, tracking becomes difficult. That's level 4. And then again, it can become even more complicated when they try to switch between a blockchain. So say from Bitcoin, they're going to another cryptocurrency, which makes it extremely difficult. It is called bridging or swapping. And agencies have repeatedly said in the internal communications that we have seen that at this stage, it becomes almost impossible to technically track this kind of obfuscation. And then the exit mode, of course, after all this is done, then when eventually the money is taken out, either through ATMs or through offshore accounts, or then further parked in other jurisdictions, then it usually remains beyond the reach of the investigators.
Now, here it's important to note that crypto platforms or crypto exchanges compliant with the rules of the Financial Intelligence Unit would not knowingly be involved in such transactions.
But it is also possible that we have seen that many foreign exchanges in the USA, and for example, Binance, they promised to the US administration and judiciary that they would not allow crime proceeds to roll through their platform, but it happened, and for that they have been penalized heavily. So this could be some sort of oversight, and it cannot be ruled out completely that no Indian exchange got into a similar situation. That's for the agencies to investigate. But as of now, we don't have any example where any Indian exchange, which is AMC compliant, has played any role unknowingly in any such transaction web. And we have to remember that no such transaction, the way we have been describing it, that is going through many layers to add secrecy and obscure the trail, they will not use any one platform or even 2 or 3 legit platforms. They will use a whole range of mechanisms and exchanges. Some are compliant, some non-compliant, and eventually the target is to add layers, and some of these layers can well be legit. But if you imagine it in a way that if you know that you don't know the source, you don't know the destination, even if you know 2 or 3 steps, 2 or 3 zones in the middle, it doesn't always help the investigators to crack the complete trail.
For investigators, it's like chasing a mouse with hundreds of tunnels to escape through. Block one and it can easily slip through another.
I mean, the exchanges here, they have this grouse that over 2 dozens of them, they are now compliant with FIU, and they try to follow, and they claim that they follow all the rules in India, but they all say that others who do not, many offshore channels, exchanges, they are still available in India. So it doesn't stop a bad actor to manipulate the system just because the majority of exchanges are following the rule. But there is still options to take the dark route and move funds.
But now the question is, despite all this, why isn't there a specific law governing crypto in India? And why has the government been hesitant to regulate it?
So, I had spoken to a couple of senior officials in the government.
That's Soumyarendra Barik again.
And, the ask is pretty simple, right? Like you talk to investors, they'll be like, in the last couple of years, there have been two major hacks of two major, Indian exchanges, right? I mean, I think one was WazirX, one was CoinDCX, and collectively, I think about 270 or 280 odd $1 million was scammed off, right? And people lost a lot of money there. But what happens, right? I mean, you are then at the mercy of that particular platform to somehow figure out if, they can get some of that money back, all that money back, or, just a portion of it, etc. You simply don't have any, support system from the government side, right? So that is on the investor side. Then as a business, you might want to be a legitimate, rule-abiding, say, crypto exchange or something like that, right? But again, you do not know what is right and what's not because a government simply hasn't told that to you, right? Then we spoke about the law enforcement problem. They don't have the SOPs. So, on the face of it, it would appear that if it is seeing such grassroots adoption, if you're aware that, it is also at the same time becoming a new channel for Hawala transactions, your citizens who are investing in this sector are getting impacted because if they lose money, they don't have any protection after that. Companies who want to legitimately do business in your country, pay tax, etc., they don't know what is the right way to operate here. Law enforcement is struggling. Why would the government not want to bring out a law, right? The government feels that, if they bring in a law, for what these officials that I spoke to told me, is that if they bring in this law, it might sort of signal an amount of legitimacy that, the government is now saying that, okay, this sector is fine, it's legit, and that might boost investor confidence further and, people might start investing a lot more in the sector. And that maybe, is something that the RBI is not very happy with because the RBI does continue to hold the point that, they see cryptocurrencies as a bit of a threat to India's financial stability.
He says historically the Reserve Bank has been very cautious about cryptocurrencies. In fact, in 2018, it had even banned banks from providing services to crypto exchanges, though this ban was later overturned by the Supreme Court in 2020.
Since then, an absolute ban has never been spoken about. And I think India has also eventually signaled, when India was heading the G20 a couple of years ago, under our presidency, under our chairpersonship, there was a report that was prepared basically by the FSB, which basically, signaled that, okay, India is now maybe easing a little bit, basically because that particular report said that, an outright ban was probably not the right way, but it did call for like a lot of international cooperation and sort of said that international cooperation is perhaps the only way to go ahead and regulate the currencies because, the problem with law enforcement that we spoke about, right? It is the problem about international cooperation, right? If two governments are not willing to engage when an investigation has to happen on cryptocurrencies, no regulation within one government can probably ever sort of, address that very core issue. So I think, increasingly, while the RBI remains to be, a major skeptic about the sector, about these currencies, and while the government is also not, very keen on like promoting them in any way possible, I think talks of a ban largely since the 2018 ban, which was eventually overturned in 2020, I think a ban is increasingly now seeming like a slim possibility. But what is being really missed is that, if there is not going to be a ban and if all the trends are showing to you that people are going to be investing in this sector, I think what is really being missed is actually a regulation.
Now, when the Supreme Court overturned the ban in 2020, it essentially said that everyone had the right to do business, and that the ban was disproportionate, and that the RBI had not found any evidence of harm or adverse impact caused by the activities of these virtual currency exchanges.
But in a very recent case, actually, it was, very ironically, the Supreme Court itself in May, this was a case about, some money laundering that had happened via cryptocurrencies. And I think the perpetrator of the case has gone to court, etc. And in that, the court has lamented, saying that there is no clear-cut policy on cryptocurrencies, and the court is not even mincing its words. In that particular hearing, when it was happening in May, the Supreme Court said that trading in Bitcoin in India is like dealing with a refined way of Hawala business. There are no regulations at present. So clearly, a Supreme Court which overturned the ban, saying that, a ban is just not the right way to deal with things. And 5 years down the line now, since that very landmark judgment, to be honest, for the industry, the same court itself is lamenting the fact that, it has now become a refined way of hawala business, but the government is sleeping on it, and because there is simply no way to regulate the sector, or the government is not keen to regulate the sector. So yeah, I think the court's attitude towards it is also like reflective of the times, and also very reflective of the investigation that we've done, in that, this is now what's increasingly happening in the sector. The court very rightly has pointed out that, cryptocurrencies have now become a refined way of hawala business. Of course, not all of them. We have to have that caveat at all points. There are legitimate, innocent investors in the sector who also lose a lot of money when something goes wrong, when a scam happens, when they willingly walk into a trap, etc. And I think all of it really can be addressed by having an overarching legislation. The government has tried it. I remember it was trying to bring out a bill. There were some interministerial committees. An interministerial committee actually had recommended a ban. This was somewhere around 2018 or 2019. But again, that never really was fruitful. There was once, I remember, in Parliament where the government had listed a bill called the Regulation of Cryptocurrencies, something to the effect of virtual currencies, etc. But again, that bill never got presented in Parliament. And, now no one knows what's supposed to happen. We also had some insistence from, the markets regulator SEBI, where SEBI said that, the overarching architecture of a crypto exchange is not very different from, stock trading platforms, etc. The underlying fact is the same. You're trading in commodities, you're trading in futures and options and things like that. So the SEBI has also offered, to be like the central regulator for the sector. But of course, again, the government has been really slow on reacting to these things.
You were listening to 3 Things by The Indian Express. Today's show was written and produced by me, Shashank Bhargava, and was edited and mixed by Suresh Pawar. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it, share it with a friend or someone in your family. It's the best way for people to get to know about us. You can tweet us at Express Podcasts and write to us at podcasts@indianexpress.com.